Kitco News, special coverage of the Decentral Miami Conference, is brought to you by Cook Finance, a revolution in DeFi asset management.
Here with Red from Harvest Finance. Welcome to the show.
Thanks for having me.
We're going to talk about why you're choosing to stay pseudo-anonymous. It's important to our discussion.
Okay.
Yeah, but let's talk about yield farming. Important concept in DeFi, not well understood by many. What is yield farming?
Yield farming is just a way to earn passive income on your otherwise stagnant investment. So if you're holding Ethereum, you may just be holding in a wallet, hoping it goes up in price. Yield farming is you can deposit your Ethereum at a place like Harvest Finance, and they'll put it to work by earning rewards with your Ethereum, which then grows your balance of Ethereum. And Harvest Finance does that in an automated fashion to save you money like on Ethereum gas costs, network gas costs.
Okay, and give us an example of an actual token or crypto or protocol that's being harvested right now.
Sure, like Curve Finance is one of the very well-known DeFi protocols on Ethereum, and they're an exchange, a decentralized exchange. So they require liquidity to operate, liquidity from random people. And in order to get you, to entice you to deposit your liquidity there, they give you a CRV token for reward. What Harvest Finance does is take your Ethereum, deposit it at Curve Finance, you start earning that CRV token, they sell the CRV token for more Ethereum, deposit it back in your balance, and now you're earning more CRV token on a growing balance. So you're actually earning on a compounding balance and earning APY at an exponential curve.
And what's the percentage of APY we're talking about in this particular example?
In this particular example, probably about 10 to 15%. It's kind of more of like the timid type of returns where some can exceed 500%.
Well, what determines the APY? Because that's a huge range.
It's more about the project that's being farmed and the rate of emissions that they're currently focusing on farming. So it may be only short term, 1 month to 2 months, where emissions are very high and they're trying to attract a customer base, and then they'll taper off dramatically after that.
Okay. All right. So Harvest Finance, let's talk a little bit about Harvest Finance and your name, Red. So why is it important that you're not using your real name, so to speak?
Well, I mean, it's actually like a key tenet of decentralization. My name shouldn't matter. Satoshi Nakamoto shouldn't matter, right? It's all about Bitcoin in itself. You think of like Jack Dorsey, he's leaving and that messes with the price of the stock because it's so centralized around this concept of Jack Dorsey at Twitter. But in decentralized Bitcoin, doesn't matter who Satoshi is Bitcoin. And so red is red. It doesn't matter who I am to the project in itself. All that matters is my contributions are effective.
Okay, but some would argue that I don't want to invest in a project with anonymous users or founders because that's a risk, right? I don't know their background, I don't know their history. What if it's a scam? How would you respond to that?
Well, that's actually the second benefit to blockchain, or actually the number one benefit of blockchain is verify, don't trust. Everything on the blockchain is transparent, where you can read the code and see exactly what's happening. So again, Satoshi Nakamoto doesn't matter to Bitcoin. It's the code that matters. And now Satoshi's gone, but the code still lives on and everybody abides by that code. So again, as long as the code is good, which everybody can verify, you don't need to worry about who I am. Because again, how many times has somebody been scammed by a Ponzi guy and you've seen their face with a business tie on and he looks credible, let me give him all my money. Well, just because you knew his name doesn't mean he didn't scam you. The most important thing in blockchain is the code, because the code is technically immutable. So whatever the code says is law. It doesn't matter what red says.
Interesting. Let's say I'm somebody who doesn't understand computer science or read code. What would they do then?
Well, that's why there's third-party auditors and companies out there that actually do this and provide this service. And then you can say, hey, look, you don't need to trust what Harvest Finance says. Trust these auditing companies that everybody across DeFi recognizes as the go-to auditors, right? So then there's also independent people in DeFi that come and check and poke at your code, and they say, yeah, it looks like this code is all right.
Okay. And advancements in DeFi that you're looking at right now that really excite you, what are they?
I just think overall in DeFi that we have maturity across protocols, whereas like in 2017 it was white papers and a bunch of promises, and we just want to sell tokens so we can fundraise, but we're not actually delivering anything. Flash forward today, where the fundraising mechanism is actually built into the protocol itself. So they're not delivering just a promise in a white paper, they're actually delivering the protocol that's usable, that customers can actually use and see. So things like Aave, a Curve Finance, these decentralized exchanges that prove I don't need a central bank providing liquidity and pulling all the strings. Random people all over the internet coming together with a common cause can pool their money together and try to buy the Constitution. How powerful was that?
Interesting. Okay. So you think there's more confidence in the DeFi space now than there was in 2017?
Oh, much more confidence, yes.
So suppose we have cryptos are inherently volatile. Suppose we have another downturn in the cycle. What's going to happen to most of these projects? Will they survive this crash?
So it just very depends on each of these individual projects, right? Like how are they handling their treasuries? Are they a Ponzi scheme to begin with? Were they even a viable company? But it's a great question because people think about 90% of all those 27 ICO companies actually failed. But it's kind of like the dot-com era. There was an explosion of growth and then the bubble popped in .com, but now you have this game-changing technology of the internet today. I think decentralized finance and blockchain technology is following the same trajectory.
And, great point there. How do you know if something's a scam? Because you see people, users on the internet saying, oh, this project's a scam, well, that's a scam. I don't know how much due diligence those people have done to claim or make those claims, but how would you identify whether or not a project is legit?
I mean, that's a great question because there is so much out there. It is very difficult. And you ultimately kind of have to find, as an individual, and this is my own opinion, find projects that more interest you as opposed to trying to buy like the next lottery ticket, right? Because that's unfortunately what people are trying to do, trying to find the next Dogecoin or the next speculatory item. But if you can find a project that's interesting to you, oh, these guys are great because they're revolutionary debit cards or whatever it is, then you start doing due diligence within that project because a lot of them have documentation repositories. You can go to their chat rooms and interact with people and kind of get a feel for that project. But ultimately, you are going to have to do due diligence. Somebody buying Amazon for the first time or some of these unknown things on the stock market, you really have to do your research in anything that you're going to put money into, and cryptocurrency is no different.
And you said that there's a lot more adoption of DeFi applications now than a couple of years ago. Does that mean that the price has also matured, generally speaking, in terms of valuations? If adoption has matured a little more, does that mean we've already more or less hit the peak in terms of valuations?
No, not at all, because I really think this is the first iteration of protocols coming out and people really trying to find maturity. But you only have 0.0001 of the population looking at crypto, right? What happens when all these really brilliant people start to take crypto seriously and they can make it into something even better? I was just speaking about Vitalik Buterin, and he actually said, people have turned Ethereum into much more than what I thought it was possible, right? And that's because other brains came to the table. So I think we're just scratching the surface of potential.
Red, I really appreciate your thoughts. Learned a lot. Thank you.
Appreciate it. Thank you very much.
And thank you for watching Kitco News. I'm David Lin.
Kitco News special coverage of the Decentral Miami Conference is brought to you by Cook Finance, a revolution in DeFi asset management.